All right, so this question is about scaling into a profitable position, right? So basically all of these here is about setting an order, 25 ticks above, the first entry point, and then 50 ticks above that first entry point, and then another 75 ticks, right? So you can see where, this question is about stepping in to a profitable position at 25 tick increments here, all right? And just to note, to do this purely in BlackBird can't be done with a market order. So BlackBird would need some kind of outside reference point to be able to submit a market order at these 25 tick increments here, like this. So we're going to approach this instead of with a market, we're going to approach this with a stop entry order. So we'll copy that and modify this just ever so slightly there. So let's see if we can find something on the chart here to kind of give a illustration here. So let's say the first order, gets entered right there, right? Then the next order, is going to be, I'm just kind of ballparking this. Let's say that's 25 ticks higher. So the next order, right, basically scales in to a profitable trade here, right? So this would be a long trade here, right? And so the next order scales in, so we're now adds another contract in, right? And then again about another 25 ticks higher, right? Scaling again a third order. So now we have 3 orders, right, in a long direction. And then the fourth order, I guess that looks about another equal distance higher, right? And then a fourth order gets scaled in here, right? So that's kind of the backdrop of this question here is scaling into a profitable position. And then there's 2 scenarios about setting up the exits here, right? Oh, yes. Okay, yeah. So these 2 exit scenarios are profit targets. Okay, so there we go. So we'll just clarify that. So these are getting out of the position, with 2 different types of profit targets here. 2 different scenarios of hopefully exiting, the position, in a profitable manner here with profit targets here. And the stop losses here, so if we look at the end, and the stop losses will be moving to the average cost, right? So as each of these entry orders scales in, right, our average entry price is going to move higher and higher if it's a long trade. So we want the stop loss to trail up. So let's just say, right, our stop loss starts down here somewhere. And so once we get the second entry order filled, right, then our average entry moves up, right? It steps up, right? The average of those 2 steps up, right? So our stop loss, we want our stop loss, from starting down here to move up to the average price. And then as the third order, right, gets filled, then obviously the average entry price steps up again to right there. And then as that fourth entry order gets filled, then our average entry price is going to step up once again. So we want our stop loss to step up there. Okay. All right. So I'm going to need to switch over to the simulated data feed here so I can control the market and make sure that we get all of our entries filled there. All right. So let's get BlackBird up and running. So from our strategies window, we're going to go to Shark Indicators and then go to Bloodhound. And let's enable the strategy and call it good. All right. Okay, now we have BlackBird up and running. So we're going to use the order settings button here to open up the interface. And all right, let's take a look here. So obviously, yeah, so this is going to be an automated system here with a bloodhound signal here, but that's not really the key to this question here. So I'm not gonna plug in a bloodhound signal. It's just gonna be, it's just gonna hinder the testing, right? It's just gonna require generating some perfect conditions if we start using a bloodhound signal. So I'm not going to use a bloodhound signal. I'm just going to use the chart trader buttons, right? And so let's see, our stop loss is going to be 30 ticks, a 30 tick stop loss. And let's see, yeah, it doesn't say what the first entry order is going to be, but it's a market order. So we'll start the first order set as a market order, market entry. All right, so let's create our stop loss here, and let's see here, let's go to trailing, and I'm just wondering if there's a quick list here. Yeah, and so also so Antonio, to kind of answer your question about how to create an order with a trailing stop, so there's a bunch of quick list options here that are pre-configured to kind of get you started, right? So all of these options here, this list here under trailing, these are all various types of trailing stop losses here, right? So if you just want a simple 10 tick trailing, there's the first one, or maybe you want a 10 tick trailing but with a break even, right? So basically this one will wait for 10 ticks of profit and then move the stop loss to break even +1, and then it'll start trailing by 10 ticks afterwards, right? And then a simple ATR trailing, and then some various other ones there. Let's see. So I don't really see one of these quick list here that will address the question. Let's see. Yeah, so I'm just going to go with a fixed 10 tick, and I'll build this stop loss and it's trailing from scratch here. So let's just go with a basic one, and we'll change this from a 10 tick to a 30 tick, right? So here, let's just type this in. There we go, 30 ticks. All right, and then for the trailing, we're going to build a custom trailing here. And then we're going to add a trailing rule right here, this button. There. Okay. So we're going to trail to the average entry price as the average entry price changes. We can skip the trigger because we want this trailing to actually no. Let's see here. Let's see. We do want a trigger, but we can't build the trigger yet. So we'll come back to the trigger here, and I'll explain this in a moment. Well, actually, here I can at least start it. So we're going to use this order status changed here. So we can't finish it right now because I need the second order set to be created first. So what we're going to do is the trigger. What's going to start the trailing is when the second order set gets filled. Right, so when that gets filled, right, that is our cue that we want the stop loss to move up to the average entry price, right? So we'll come back to this order status change here in just a moment. So, and for the action, we're gonna change the move to, right? We want our stop loss to move to, and it's not the last price. We actually want it to move to the average entry price. There we go. Just like that. So, and then the repeat, we want this to, repeat basically, indefinitely throughout the life of the trade, right? So because, hopefully we'll get three other scaled in contracts, right? So which will adjust the average entry price. And so therefore we want this trailing roll to, keep repeating itself. For every entry order that gets filled, we want it to keep trailing up, moving up to the average entry price. So let's see. Okay, so I think we can move on to the next order here. So I'm going to make a copy of A. Yeah. And so the second, so we have here, right, the second entry is going to be a stop entry 25 ticks above. Right, so all right, so let's make this a stop entry order, and the placement is, let's see here, yeah, we don't have an average entry available for us. Let's see here. Yeah, so what should we do? All right, yeah. So we'll take the last price and add 25 ticks to it. There. All right. So so in theory, obviously it depends on how volatile the markets are, but in theory, the market, our first order set, right, this market order, should get filled at or near the last price. Of course, it depends on whether that last price was at the bid or ask, right, and all that detailed stuff, and also depend on the spread between the bid and ask and where that last price lies. But this will get us very close here, right? And then let's see. All right, yeah. So now that we have order set B made, let me go back to my stop loss trailing rule here. And remember I said we're going to use this trigger here. And so, you're right, we want the stop loss to start moving up to the average entry price when, let's see here, where is it? There you go. B, when the stop entry is filled. Right, so when order B, right, so order set B, we're looking for the stop entry to get filled. Right, so when order B gets filled, that's our cue to move our stop loss up to the average entry price. Right, so what would happen is if we didn't have this trigger, what would happen is our order, our stop loss would get placed at 30 ticks, and then the trailing roll would immediately kick in and move our stop loss to the entry price, right away, as soon as this first order gets filled, right? But we want to wait until the second order gets filled and there's an actual averaged entry price, right? So that's why we need this trigger, as this trigger builds in a delay mechanism so that our stop loss doesn't move up to the entry price immediately, right? So this waits for the second order set, to actually get filled, and then the stop loss can move to the average entry price. So, all right, so we have that, and so we're going to do the same thing, right, with the stop loss for order set B. Is we need to go into our order status changed here, and also put this on the stop entry. Okay, there you go. There's that entry order. There. All right. So now we can just simply we can just simply copy B now, because the let's see here. The third entry, yes, we're just going to adjust it to be 50 ticks, and the fourth to be 75 ticks. All right. Yeah. So we'll make a copy of B, and then go into the entry order here, and go to the options tab, and adjust our offset to 50 ticks, like so. All right, and then we'll do this one more time. Make a copy of C. And now order set D. That will be a 75 tick offset. All right, so that is, yeah, so that's this first part here, right? So what's going to happen is, right, as each of these order sets gets filled, we can see that our stop loss is going to get placed as a 30 tick stop loss, but then immediately, right, so let's say for our third, scale in position here, order set C is our third scale in, right? Or I'm sorry, actually our second scale in. So B is the first scale in. So C would be our third order, but our second scale in order, right? So when C gets filled, the stop loss will get placed at 30 ticks, but then the trailing rules will kick in immediately, right? Because this order status changed. Let's see. Actually, we don't even need this. Yeah, probably better if we just completely remove that completely. Yeah, we should just remove the trigger completely, so that way our stop loss moves immediately to the average entry price. Yeah. Yeah, we don't need that trigger, right? Because we're on our third scaling contract, or our second scaling contract, or our third contract. So, yeah. All right. So let's also go and remove this one as well, and set this to none as well. There we go. And then also I might as well go to B, right? Because when B gets filled, we don't need this trigger mechanism either. So let's set that to none. There. All right. Yeah, so all of these stop losses, they'll get placed at 30 ticks, and then immediately, like a split second later, they'll all move to the average entry price. All right. Let's see. So that's the basis right there. And so the next step is to then create these two profit target scenarios here. Let's see. So, all right. So the first one. All right. So we want 100 ticks from the original OCO entry price. All right. So let's. Yeah. Currently, this isn't technically possible to do this precisely at 100 ticks. So we're going to get close to 100 ticks, but it's not going to be exactly 100 ticks yet. So the next update, there's going to be some more enhancements here. So for anybody watching this in the future, there's going to be some enhancements here, and so yeah, I'll explain that as I get going here. So let's just build this, and I'll kind of explain it in a moment here. So our first profit target, I'm just going to use the 10 tick from the quick list here, and then go into the options tab. And so our initial placement, we just need to bump that up to 100 ticks. There we go. So there's our first one. And so for the second profit target, now what we really need to do, so you notice here is our prices here say, we have the OCO entry price, which the OCO would be the entry price for order set B, right? So this entry price is for its order set, right? So this would be the entry price of this stop entry here for B, right? And we also have the average entry price, right? So that'd be the average entry of A and B. So, but what we need is like a third option here. to reference the entry price for either, the entry price of order A, or reference the profit target price of order set A, right? So what's coming, what we have planned here in the next update or two. Let's see, actually, no, it's not the next update, but update 15. We'll be able to reference all of these specific order prices. So in here, we'd be able to reference the price of profit target A, right? And so if profit target A is at 100 ticks, then we could guarantee that the profit target for order B would also be at 100 ticks from the entry price of order A. So, but that's not, that's not available now. That'll be in update 15. So for now, we're just going to have to take, we're just going to have to take the entry price, right, for order B, and since this is, approximately 25 ticks higher, we're just going to set this to 75 ticks, right? So we'll just do a little math here. So, like so. And so we're just going to repeat that same step here. So this profit target will be, 50 ticks. It'll be 50 ticks. So, right, because the entry is approximately 50 ticks higher from the first entry price, all right, from the first fill. And so we'll just take this 50 ticks higher plus another 50 ticks. It gets us in the ballpark of the 100 ticks. And same process here. There we go. All right, so that would be the first scenario here. All right, so let's save this here. There you go. There's some kind of a name there. All right, so let's save that, and we'll give it a test run here. All right, let me move the market up. All right, we'll go long. Boom, boom, boom. Now we just wait for the market to move up, and and we'll see, right, what happens with all the profit targets. And they should be all basically within, a tick of each other or so. Of course, it's going to depend on how volatile the markets are, and then our stop losses will all line up to the average entry price here. All right, almost there, and there we go. And so order A moved to the entry price. Oh, right. There we go. Okay. Yeah, so when order A moved up, basically there wasn't an average entry price calculated yet. So that's something else that we're looking into, is making sure that the average of two order, actually, I should check the stop loss here, but yeah, we're going to have to look at this. So you notice A, it went to the average entry of order set A, but not the, it went to the OCO entry price for order A, because that was the currently known average entry price. And then once the market moved a little higher, right, Bloodhound was able to get access to the average entry price and then move the stop loss for A up. So it was a little bit of a timing issue there at first, but we can see that they all did move up eventually. And actually, while we're waiting on this, let me take a look at something here. So I'm going to take a look. Actually, let's go back here. No, let's go back here. Let's go to our stop loss for order A. Repeat. Ah, that's why. Yeah, that's why. So you see I have the repeat, and it's set to once per bar. So I noticed that basically the stop losses were moving up to the average entry price after the bar closed. Yeah, so actually that was my mistake here in not paying attention. All right, so we'll do it ticks of movement. There we go. So I'm going to go in here and adjust all of these repeats here. Instead of repeating on every bar, we want to repeat on every tick of movement. So actually, yeah, we want tick in either direction. There we go. Let's go back here and adjust this one. So instead of ticks in profitable, let's just do ticks in either direction. Yeah. All right. And may adjust this one. Yeah. All right, we'll save that. And let's see here. Oh, interesting. So order D, look at here. Order D, and let me pause the market here for a moment. You notice here, order D, since our stop losses start off at 30 ticks, order D was actually above the average entry. Because remember, the average entry is actually going to be 50 ticks below where order D gets filled. Yeah, so where D gets filled, the average entry is actually 50 ticks down. So we need to go in here and adjust the initial placement for order D here. All right, so here, let me pause that, and we'll go in and make that adjustment here. All right, so order D, let's go to options and make that, right, a 50 tick offset. So, you know, if we want to, just for good measure, we could, I don't know, say make it 52 ticks, just a couple ticks below it, and then it'll snap up to the average entry price after that. Right. So, yeah, let's see. Let me just double check all these. Just want to make sure they're all set to ticks of movement, not points of movement. Yeah, I thought I did this. Okay, yeah, see, one of these I set to points of movement by accident, and I want ticks of movement, either profit or loss. Okay, there we go. Let me just double check this other one. And yeah, this one I did the same thing here. There we go. So set it to ticks. And okay, now we'll save that. All right, I'm just going to move the market a little higher here, and we'll cancel this out, and we'll place a short position and then test it again. Yeah, so we can see here the profit targets. Yeah, they were all, you know, kind of within a tick of each other. So that worked out pretty good. All right, let's close that out and move the market down. All right, let's go short. There we go. And so now we just wait. All right, let's watch our stop losses here. And bingo, there we go. So now we can see the stop loss for A snapped into the average entry price much faster, right? So yeah, changing that, right? So again, let's just kind of revisit what we did here, right? Is going into the repeat and changing the repeat, from bars to ticks of movement, right? Allow the stop loss to move much faster here. So, all right. But keep in mind that if you're, let's say, in your actions or in your triggers, if you're using indicators in the triggers or in the actions, that the repeat will not be able to repeat on a tick basis or a point basis, because your indicators are only updating on a bar by bar basis, right? So yeah, so just be aware that if you're using indicators anywhere in your trailing rules, that your repeat will not be able to function on a tick by tick basis, because your indicator has to wait for a bar to close before your indicator will update itself, right? So just keep that in mind. So that's why the repeat, defaults to repeat once every bar, because a lot of people are using indicators in their trailing rules here. So, right. Yeah. All right. So let's let me cancel out of that, and there we go. So cool. I just barely missed it, but I kind of saw the corner of my eye here that order D popped in there and then snapped back down to the average entry price. And we can see here that all of our profit targets are within a tick of each other here. All right, so cool. That would be our first scenario here, scenario number 1 here. All right, so so for the profit target, exit strategies here, scenario number 2. So let's take a look at scenario number 2 here. Okay, yeah, so these are all pretty straightforward. So each entry order, we're just gonna set all the profit targets to just basically 50 ticks. They're all just simply 50 ticks, a 50 tick offset from their entry order. So these are all just standard 50 tick offset entry orders. So that one's pretty straightforward. So all you need to do here, so I won't save this file out, but simply to do that, let's go to the options tab and into our initial placement. Let's adjust that to 50, and it's going to be from the OCO entry price with the 50 tick offset. So let's do that for all the others here. So we are taking the OCO entry price, and then we just need to adjust all these to 50 ticks. And this one's already 50 ticks. And this last one here, set that to 50 ticks. And there we go. So, simply put, that's it. So, that's how you do that one. So, again, so let me just, reiterate here, for those people watching this video, months from now, that later on, when we get to update 15, we'll actually have the ability to set all of these profit targets to match each other exactly, right? So like right now we can see these profit targets might have a tick or two offset, but we'll actually be able to reference the profit target order price, each of these profit target order prices here. So in the future we'll be able to get all these profit targets to land exactly on their price point. And the same thing with stop losses. We'll be able to get stop losses to all line up exactly, because we'll be able to reference each of the stop loss prices. And so therefore with the trailing rules here, so with trailing rules, right, we can get stop losses to snap to each other. So I could basically I'd be able to create, like a trailing rule for for stop loss A, and then have stop loss B, C, and D all say match whatever the price is of stop loss A, right? So they'll be able to reference the price for A, and so that'll guarantee that all 4 stop losses are all snapping to the exact same price, and they're all lining up perfectly. And so we'll be able to do the same thing with profit targets, right? So, we'd be able to, right now we can set the profit target for A, at 100 ticks, and then we can just say, all right, the profit target for B, just match whatever the price is for profit target A, and same with C, match the price of profit target A. And so that's how we could get all these profit targets to snap to each other perfectly, like that. All right, but again, that'll be update 15. So, okay, well, that does it for this question.